The objective here is to understand investment drivers by understanding what I call factor flow. And let me show you what I mean by that. By focusing on factor performance within the technology sector in the S&P 500. So we start with the table. These are factor returns, the numbers are, for the 25 factors listed on the first column. And these are showing here, displaying now the cumulative factor returns. And just to get a sense of the flow, the change of things, look at 5-year performance. You see the most important factor for performance was R&D to sales, research spending. If you go to 1 year, it was ROE. If you go to 1 month, it was research spending, but not R&D to sales, R&D to enterprise value. So to get a clear picture of factor flow, it's useful to look at the charts here as well. So the chart on the screen now is the full 5-year history, 25 factors, kind of a mess. I'll clean it up. But what's pretty clear from the chart is that something sticks out, the R&D to sales factor return. Let's get some more focus on this by zooming into 3-year history. Again, kind of messy, but you see that things are changing. So this is the R&D to sales factor. It broke in July. We'll see that more clearly in a second. And what seems to be coming up in the pack is return on equity. Let's get some more clarity and let's clean this up a bit. I can get rid of all the factors here. Let's bring up a couple just to see what's going on here. These are data taken, data through January 22nd, 2025, just for record. So let's look at R&D to sales. It started picking up at the beginning of January 2023. Why did it start picking up? Arguably because that's when Microsoft injected about $10 billion into OpenAI, and a couple of months after OpenAI was open for shop, and it sort of declared the AI importance. So there was an episode of R&D investing for innovation catch-up, if you will, and that took off and continued until early July 2024, which is when the 10-year peaked at 4.7%, and that brought the market down 2 weeks later, and R&D broke. It has not really come back significantly since then. We'll see a little bit more in a second. Let's look at ROE I mentioned before, and ROE took off a little earlier, April, later than R&D in April. So that took off again when 10-year rates came up. Continued to be important to cut a pop in the Trump election. Now let's zoom into 1 month history just to get some sense of the flow. And let's look at a couple of factors here. So let's look at momentum, 1 month history. It kind of died, but maybe it's coming back. Let's look at research R&D to sales as we looked at. Looks like it's maybe died, but maybe it's coming back. But let's look at value. Sales to price seems to be doing well. Earnings to price seems to be well, maybe turning around. And EBITDA as well. So you see potentially transition at the beginning of the year, value taking off, and some of these R&D spending momentum not doing so well. Maybe it's coming back though. Let's take another peek at this and highlight another issue of the factor flow that's developing over the last month. So this is R&D to sales I showed you. Kind of broke, maybe it's coming back, but let's look at R&D to enterprise value, which has more of a valuation quality. So R&D to enterprise value, actually it's been doing okay. It's really kind of similar to sales to price, which is kind of interesting. So another thing you see in the transition that's happening is a switch from one way of thinking of R&D spending to another way, which may have a more valuation quality and consistent with the idea, again, that value becomes more relevant for tech performance. So this was a brief example of how to understand investment drivers in terms of factor flow. Things are changing for tech. You can also look at it for other versions of the market, other segments, other sectors as well. Take a look. Thank you very much.